Hey everyone, today we're going to talk about worker misclassification. Like sometimes it might seem simple, like okay, I'll just 1099 this person who did this job for me, but in truth it could have some pretty expensive repercussions if you go about it the wrong way and how to go about protecting yourself. So I've actually seen this all too often. Like somebody does some work for you, even for a really short period of time, like a couple months or something, and you get a letter from either the FTB, the IRS. Let's say for whatever reason this person is trying to scheme against you and make a cash grab opportunity. They ask for a worker reclassification directly from the IRS, and nowadays the IRS isn't as lenient on it as they once used to be. There used to be a Section 530 safe harbor, but now they're not so much. So anyways, so what I want to talk about is, first of all, let's go at this from reverse. So what are the penalties or repercussions of misclassifying a worker? Everybody wants to really just 1099 as much as they possibly could because that's the simplest route. But what would happen if you were to 1099 somebody but they were truly an employee? So you would be on the hook for back payroll taxes, which is the FICA, Social Security, Medicare. You would be on the hook for any income tax withholdings that you would have been required to make. Also any unemployment insurance contributions and any penalties and interest related to all these amounts together. So that 1099 shortcut could realistically end up costing you to 50 to 150 grand between back taxes, penalties, interest, and legal fees very easily. So, it's kind of important to get this right. Now, who are the agencies that are interested? So for one, there's always the IRS, that's federal. And then there could be any state agencies involved. So in California, that would be the FTB, the EDD, the Department of Industrial Relations, Department of Labor Standards Enforcement. So any one of these, agencies can come at you for this misclassification in any way. So I'm going to go over the standards with respect to federal, what the criteria that the IRS looks at, and also California as well. So the IRS uses a three-pronged test based on three criteria. So there's behavioral control, financial control, and relationship type. Behavioral control is who decides how the work gets done. If you tell them when to start, what to wear, what tools to use, and you train them, they view that as having behavioral control. So employees are regarded as being controlled, however contractors are not. Now moving on to financial control. If you pay them hourly instead of by project and they have no leeway for having their own profit and losses, then you're deemed to have financial control as well. Contractors usually invest in their own tools and they have their own business income and expenses. Finally, there's the nature of the agreement. If you have a written contract with benefits, exclusivity, ongoing work, these all indicate employment. Contractors typically work for multiple clients and have, only short-term project-based relationships between each one of these clients. So the IRS looks at the whole picture between the behavioral, the financial control, and the relationship type. Now, there used to be what was called a Section 530 safe harbor under the IRS, and this was kind of a get out of jail free card, which was basically that if you had a reasonable basis for classifying somebody as a contractor and you consistently always classified that person as a contractor, they would let it slide. But nowadays with new IRS guidance, it's becoming much harder to qualify under Section 530 safe harbor, and these requests are getting systematically denied. Now, California is a little different and they're even stricter, and they use what's called the ABC test. Now, to qualify as a contractor, you must pass all three parts of the ABC test. The first part, A, is that they're free from your control and direction. If you're telling them when to show up, how to do their job, and you're supervising them closely, then that part would fail. The second part, B, of the ABC test is that the work is performed outside your usual course of business. So if you're a concrete contractor and you hire somebody to come pour concrete for you, then chances are they're going to fail that test. Now, if you're a concrete contractor and you hire somebody to come clean your office or fix your website or do your marketing, that won't be a problem. Finally, part C of the ABC test is that this person is ordinarily engaged in their own trade or business. And that means they have their own tools, licenses, business cards, insurance, and even their other clients. If they fail any one of these 3 prongs of the ABC test, then they would automatically be considered an employee under California. Now the punchline, how do you go about protecting yourself? Well, there's 5 things you can do. Number 1, use a written subcontractor agreement. Spell out that they're independent and responsible for their own taxes, insurance, and equipment. Number 2, verify their insurance and licenses. So always ask for a certificate of insurance and ask if they have, workers' comp, they have business liability coverage. And again, to feed it into part 1, make sure that that's spelled out in the original contract. Number 3, pay by the project, not by the hour. The more control you have over when and how they work, the more it looks like employment. Number 4, make sure they have multiple clients and not just you. If you're their only client, quote unquote, then that takes away, the view of them being independent. And finally, number 5, as always, keep documentation. Make sure they maintain their own business cards, again, their own insurance, their own marketing, their own invoices. So the more records you could keep, their invoices, business cards, all that, the more proof you have that you were aware that this person had other clients, had their own business, and truly operated like their own business and not like an employee. So to make full circle by way of examples, if you hire somebody to come pour concrete 3 days a week, he uses your truck, your mixer, your tools, you tell him when to show up, you pay him hourly, this person is going to be viewed as an employee for sure. If you hire ABC Concrete Finishing Company as a licensed subcontractor and they have their own truck, their own tools, their own crew, they place a bid among others, they have their own insurance, and you pay them for that given project or by the project, then that would be a legit contractor. So I'm just looking out, just follow the 5 things that I mentioned and you should be good to go. That is, use a subcontractor agreement, make sure there's an agreement on file, verify license and insurance, pay by project, not by the hour, make sure they have multiple clients, and keep documentation on everything. That is business cards, pamphlet, invoices, website, what have you, whatever you could, keep documentation. And follow these 5 steps and you should most likely be covered. I hope you found this helpful. Click like, subscribe, turn on notifications for any updates, and I hope to see you in the next one.